All right. Well, thanks a lot for that, Prashant. Well, let's move on then to discuss the consumption space now and the trends that are seen in the e-commerce and quick service. Well, we're joined by Abneesh Roy, Executive Director at Nuvama Institutional Equities, who joins in. Hi, Abneesh. Morning. Always good hearing your thoughts. Abneesh, I wanted to ask you, this entire push online, are you seeing it more in only urban cities, or do you believe that, in fact, you're seeing that even percolate down to tier 2, tier 3 as well?
Yeah, thanks, Nigel. So definitely e-commerce has definitely picked up even in the rural areas, thanks to Geo, thanks to the overall rates coming down past few years. So across the companies, we do see that not just urban India, even the midtown and the smaller cities have caught up. And even in the rural areas, we are seeing increasing signs of that. Having said that, now with life coming back fully to normal to pre-COVID, we are also seeing the physical part of the buying coming back fully. So I think both will coexist. We also need to see how the D2C startups, how they fare. Clearly, liquidity has dried up. We are seeing a lot of M&A. Unilever, for example, acquired two D2C companies just 2 weeks back. So that trend is also there, that all these e-commerce players, D2C startups, which do not have a proper funding, I think there is a challenge there. So my sense is long-term, both will coexist, but near-term physical retailing is also coming back strongly.
Any indications of how this November, December, actually October, right? The demand has been for the FMCG companies. Where is it that we've seen a lot of traction? What are your channel checks suggesting by way of trends?
Yeah, in the FMCG now, from a rural yardstick, there is some base effect which is helping, but structurally, I think rural demand still remains quite challenging. Unless the rural consumer sees deflation in terms of his consumption, say diesel, fertilizer, general inflation further, I think till then rural recovery is still awaited. But yes, because of base effect benefit, the rural slowdown is definitely tapering down. Just to give you some numbers, earlier as per Nielsen, the rural volumes were declining almost high single digit. Now I think it has come down to more like mid single digit, but still currently urban demand is growing faster. In terms of categories, I would say that definitely biscuits, noodles are still growing faster than many of the other segments, but that's because of down trading, and definitely the market share gains are happening. So we would expect Hindustan, Unilever, Britannia, Nestle to outperform most other staple companies in Q3 and Q4 both. Q3, the margin recovery will be gradual. The real margin.
Oopsie.
Okay, we've snapped that connection, but we've managed to reconnect with Abneesh. Abneesh, go ahead. You were telling us about how rural is seeing a slowdown now. The decline has just been in mid-single digits versus double digit earlier.
Right, you're absolutely right. So we expect Hindustan, Unilever, Nestle, and Britannia to outperform most of the other staples because biscuits and noodles are growing faster. In terms of margins, we expect recovery in Q4, the bigger recovery because of the lag effect. Q3, there will be some expansion of margins versus the first half. But in terms of the YOY, I think the real improvement will start from Q4. And rural recovery, my sense is also will start more from Q4, somewhere in Q4. In Q3, rural structural recovery for FMCG has still not happened.
All right, Abneesh, one stock that's going to be in focus is Dabur, and that's opened with a cut of around 2.5%. The promoters selling a small stake out there. What's your current rating on the stock? And if you could tell us how you're viewing this development.
Yeah, I think this development, which I think has come yesterday, this is very rare, right? In FMCG, promoter stake sale is very rare. Of course, investors will not necessarily see this as a very positive, so they will await clarification whether this is a one-time. Yes, promoter stake in Dabur is quite high at 67%. Out of that, if they are selling 0.8, still it's a very high promoter stake. But is it one time? Second is, as I said, because the rural demand still recovery is awaited, and winter also has not really met full expectation in terms of the initial euphoria that it's going to be a strong winter. Dabur will be slightly middling in terms of our pecking order. So we have a buy. It's a great play on the rural recovery in FY24, and now the immunity part of the portfolio, which was a challenge, I think that has gone away. But investors would have some questions on why this promoter stake sale, because in terms of dividend, if you see, Dabur has around 50% dividend payout. They pay around 600, 700 crores dividend to the promoters. So why further?
Okay, we'll try and reconnect later. But Abneesh, thank you very much for joining in. Let's get in our 9-10 calls as well. We've got our experts with us. Sudarshan, what do you have?
Well, the Nifty could be